the taking. Success, freedom, money, time, it's available for anyone in the world if they're willing to do one thing. Look themselves in the mirror and say, I'm going to get better today. You want to make $100 before leaving for work? You want to make a month's salary from your phone? You want to have that FU money? You have to be willing to work, to learn, to fight through adversity, and come out the other side a boss. My trading journey has been rough, just like yours. I've had losses, self-doubt, rage, but in each one of those moments, it led me to be a better trader. It led me to the strategies that work. It led me to 6 figures in payouts and profits. So if you're frustrated with the markets and pissed off at yourself at a bad trade, and that's brought you here to this moment, then congratulations, you're going to get better today. Let's go. I'm not gonna lie, that was absolutely epic, guys. That was the first time I've saw that. I'm not gonna even lie to you guys, so I'm extra pumped up right now. Yeah, I got goosebumps right now. I need to kind of take a second. That was pretty dope. Dave, really appreciate that. I was gonna ask you if I could see a sneak peek of it, but I'm like, I kind of want to just kind of see it with everybody. So I really do appreciate that, guys. Um, yeah, that was really dope. But getting into it, guys, I really do appreciate the intro. I will say one thing before we get started. New York pizza, 100% hands down. That's the end of that discussion. But for those that don't know me, obviously, my name is Zach. I'm an exclusive analyst in the Stock Dads Discord as of right now. As DJ mentioned, I had my own Discord for about 2 years, and I was, lucky enough to get an opportunity to join the Stock Dads team, be a part of a team. And for me, I feel like that was the one thing that was missing in my trading career was being a part of a team. Unfortunately, I couldn't really have the team, within my own Discord. So, I was blessed enough to be able to join the Stock Dads team. A little bit more about myself. I've been trading in the market since 2019. So I wasn't technically a COVID, trading baby, but I was trading a little bit before that. And I played collegiate baseball, like they mentioned as well. And my last grad school season was the COVID season. And at that point, I didn't know what was going on in the world. Any dream or aspiration that I had to play professional baseball was kind of put on hold and ultimately thrown out the window, unfortunately. But I believe everything happens for a reason. I was able to really invest in my education, and that's the time where I really pursued trading. And so I've been trading full time since the start of 2022. I've been trading futures since the end of 2023. Options is my bread and butter through and through, though. As I mentioned, so far on the year in Q1, 53,000 in futures payouts. And what I'm more proud of is fine tuning the option strategy. And one thing I'll say about options, guys, before we kind of get into this strategy is that I initially developed my entire system based on being able to teach it because in my old Discord, you know, it's great if I can take trades, but if people can't follow me, it didn't really do any good for the business. So I pride myself on having a system that's pretty comprehensible for the most part. And in particular, this strategy is something that's definitely newer. It hasn't been with me all along. And, is this some type of secret strategy? Not necessarily, because I'm going to share it today. But as far as I know, at least, this isn't something that you can find on YouTube. This isn't something you can just easily Google. People ask me what my post earnings trade setup is, and I'm like, listen, I'm happy to explain it to you, but realistically, I'm going to need a lot of time. And so we have time today. And so I'm super excited to get into it. So, with that being said, guys, I want to kind of read the room a little bit because obviously, when everyone hears earnings, right, they kind of have a negative connotation about it, right? So, I'm going to ask you guys a couple questions here. Number one, because I know we do have some people that only trade futures here that may be interested in learning an option strategy, which can be effective immediately. Number one, guys, who here, put a one in the chat if you ever just taken any type of earnings lotto before in your life? See a show of ones in the chat if anyone's ever taken an earnings lotto. Okay. So, pretty safe bet that we have some apes or former apes and degenerates in the chat as well. And I'm assuming I'll see some more ones here as well. But let me know, have you ever, someone said every day, have you ever lost on an earnings trade? Have you ever lost on an earnings lotto? I'm assuming everybody who put one to start is going to put one now as well. Yes, there we go. And honestly, guys, this is the most frustrating part to me. And, I'm sure we'll see some more ones, but put a one in the chat if you actually chose the right direction of the stock, but you still lost money. So you were betting on an upside move, we still got an upside move, and you ended up negative, right? That seems to be the case with most people, all right? And so I always wondered, like, how do people make so much money? Obviously, you have these insiders that know what's going on beforehand, but there just seems to be more to it, right? And then after the earnings happens, right? That's the key thing that always got me. After the earnings report happens, the next day, the next few days, the next few weeks, what happens from there? Whether it's good, whether it's bad, what are the next moves? So, what do some people naturally do, which is what I used to do all the time? You would go online, you would say, oh, how is the EPS? How is the earnings? What did the call say? And you try to look into actually all the fundamentals. And then oh, you know what? I'm going to make my own opinion based on these fundamentals. And you don't even know. You're looking at PE ratio. None of these things really matter when it comes to day trading, right? So, the end of the day, there's money to be made pre earnings, right? But there just has to be so many things going in your favor, right? And so for me, I always knew that there was more. And it really hit me. This is a long story, but uh, I used to own tons of shares of this like penny stock, right? And every quarter they grew and grew and grew. The financials were great, but it was never reflected on the actual move of the stock. And that's kind of when it hit me early that the reports never actually mattered. Everything, for the most part, one way or another, is priced in. The only time, in my opinion, at least, based on my system, when things are not priced in is when we get these exaggerated moves. But at times, these exaggerated moves are exactly what we want to see for the post earnings plays, right? So, a couple other things. Obviously, we don't want to gamble, right? Someone once told me, this quote, I'm paraphrasing this quote, but this really stuck with me from a long time ago. And it said that successful traders don't gamble earnings because they have confidence in their system, where beginner and unexperienced traders maybe feel like that they do have to gamble because they're not as confident that they can make money and they feel like they need to get lucky. So that really stuck with me. And just a couple other things, guys, that for me are no-nos, right? And occasionally I'll have a swing trade through earnings. It's not going to be a pure lotto, but it's going to be based on the technicals, and we're hoping that the earnings doesn't impact it too much, right? So, a recent one of that for us in the chat was JD. But a couple things, right? If you have an earnings lotto that goes south, even if it's only a couple $100, relatively speaking, to some that might be a ton, to some that might be not be a lot, but if you start the day red, even if it's only a couple $100, you're more likely to tilt, right? You see red on your screen naturally, subconsciously, red is associated with bad. So you may make some poor decisions, right? Number two, opportunity cost is a real thing. Even if, like I said, it's a couple $100, maybe not a lot of capital. If you're spending money pre-earnings on something and it doesn't go your way, you're now, in theory, wasting money and or opportunity costs on setups that could be coming down the line, even if it's not on the same ticker, right? And so for me, that's something that's very important. Opportunity cost. I'm a big believer in opportunity cost, regardless of what type of system you use in trading, regardless of what vehicle. Opportunity cost, in my opinion, is everything, right? And at the end of the day, seasoned traders don't need to do that because they know at the end of the day, another setup will come. And, before we get into it, guys, it really is a key testament, I believe, to just believe in yourself, believe in your system. Because, like I said, a lot of inexperienced traders don't have that belief in their system. And you may not actually have your belief just yet. You may not know exactly what your system is, but just know you don't have to deviate from that plan. You don't have to deviate at all, right? So before we get into this, guys, I'm going to just share my screen really quickly, but I'm going to define what this strategy is, right? And like I said, there's no name for this strategy. I just call it a post earnings trade setup. This is nothing you could find on YouTube, right? I believe personally that I've had such success with it, and not just making money, right? But the success rate. I don't have a set win rate for this because it's kind of hard to track that type of stuff. But you'll see later on that some of the successful trades I've had with it. And I partially believe that's because this is not maybe a mainstream setup. So for those on this, on the Zoom tonight, make sure we're keeping this info to ourselves, and hopefully we can all take something away from this moving forward. So I'm going to share my screen really quickly with you guys. So when it comes to this setup, right? The post earnings trade setup, I define it in four different ways. The first thing, and there's really no order to where this comes, I'm just listing it, right? 1 through 4. Number one, and this is something that you can apply right away. This is something you can apply right away to your trading. It does not matter how much experience you have or lack of experience. There's something that in the trading world is called ADR or ATR, depending on kind of how you phrase it. What that stands for is average daily range and or average trading range. So essentially, all that means is how much can a certain stock move in a certain time frame. So in this case here, we're looking primarily at the daily chart. And the key thing that we want to look for with these post earnings moves, these post earnings gaps, we don't care how much it gaps. To me, the percentage is actually irrelevant. It does not really matter at all. It only matters pre earnings when you're taking into account implied volatility and some of the things that go along with taking the trade beforehand, right? So, for example, have you guys ever heard of this stock before? QFI Technology. Let me know in the chat. One in the chat if you've heard of it. 0 if you never heard of it. Assuming most people never heard of it. All right. Yeah. Seems a bunch of zeros in the chat there. And I'm gonna be honest with you guys. I never heard of this ticker too before that earnings, before that earnings gap up. What I do every morning, which is part of my routine during earnings season, is I check the earnings calendar. It's posted every day in our channel in the Discord. It makes it very easy for me to just look, and I go through all the lists. There's usually not many, maybe the top 6 or 8, right? Some are penny stocks, so we can easily avoid them. But I noticed this QFU. I don't even know how to pronounce it, but we'll just call it QFIN, right? That's the ticker symbol. This QFIN, it was interesting to me for a couple different reasons, right? One, it was a Chinese stock, and at the time, the Chinese theme was hot. And I'm going to get into the other reasons later, but I'll give you a sneak little preview. The other two reasons why I liked it was because of where it gapped, and then also something to do with the EMAs. So I'm not going to get into this example just yet until I give you the entire definition for my setup, but QFIN is the first one we're going to talk about when we get in there. So number two, as you can see right now, on this chart, I only have one line. On some of the charts moving forward, the examples will have multiple. These lines right here are my key hourly levels. These hourly levels, it's not a system that I've created, but it's a system that I abide by. And so, again, we're going to talk about this a little bit more with the examples. I'm just giving you the straight skeleton definition. But we want to see a gap over a key level or a gap under a key level. And I'll explain in a bit what makes it a key level. It all kind of ties into one. That's the beautiful thing about this setup here. So just recapping that, a gap above a key level, a gap below a key level. And again, it is very important that we get that gap. And I'll explain in the examples in a bit here, guys. Number 3, and you can kind of see it here. So for those that don't know my trading style, as DJ and Dave mentioned, I'm a big believer in the EMAs, and not every EMA. In particular, I use the 8 and 20 EMAs. Some people may believe EMAs are garbage. Some people may, be a believer. Most of the people that I've talked to, I've converted to believers because I believe the way I use them is unlike most people, but that's a conversation for another day. As you can see here, the 8 and 20 EMAs are on my chart as well as VWAP. That's the only indicators that I use. I have a custom script that shows you a pretty little arrow when we flip to the upside or the downside. So number 3 on my list for the post earnings trade setups is I want to see the EMAs in alignment and or flipping trend. So when just looking at this one candle right here, we knew that with this gap, it would flip the trend to the upside based on the EMAs. It's very simple. The EMAs are now becoming bullish. Okay. That's number 3. Number 4, And this kind of circles back. And that's why I said all these things kind of coexist with each other. That's the beauty of this strategy. Number four, it has to have big targets that align with the ADR. So, meaning we don't want to have a bunch of resistance levels in the way if we're trying to go long. We don't want to have a bunch of supports if we're trying to go short. We want to have wide open space that lines up with the average daily range based on the previous earnings. And so now that I kind of gave you the definition, that's really the four-step definition right there, right? That's really the four-step definition. Now we're going to go back and we're going to start touching upon number one, and then we're going to kind of flow into these examples and show you exactly how it works here. So as you can see, the average daily range, what does that simply mean? If you guys are day traders or option traders, you probably have an idea if, let's just say, you're interested in trading Tesla, for example, right? Tesla is usually a fan favorite. You usually know how much Tesla can move in a day. And then some days it'll have an anomaly to the up or downside, right? I found, based on my system and this strategy, that the post earnings moves more often than not give you that anomaly, give you that bigger move, give you that expanded range, whatever you want to say, however you want to call it. So if we go back to QFIN, we can just use basic math right here. If we just go to the previous candle before, the high of this candle was roughly around 43.8. The low is around $42. So from the high to the lowest point of that day, it was not even $2. Go to the previous one there. High, 40.38. Low, 39.3. A dollar. A little bit of a larger one. 39. Let's call it 39 to 41.5. $2.50. I'm not going to do this with every candle, but by just doing a couple, you can get the idea. So, maybe we'll do one more. We have this big green candle here. Went from 41 roughly to the highs here around 43.5, right? So we could probably say it's a safe bet that on a larger day, this stock will move $2.50. On some of the smaller days, maybe $2 and even as little as a dollar and change, right? But the key thing, and this is the first, so after I look at the earnings calendar, I look to see, does it have a gap? Before I even do levels, before I even do, steps 2 through 4, I go back in time. And it's literally this simple. I'm sure most of you are familiar with TradingView. If not, TradingView lets you go back pretty much years so you can find any of this data pretty easily. So all we're going to do is scroll back to the previous earnings. And what do you know? We have an earnings right here. So from this earnings low to the earnings high, we went from 33.5 to 35.5. So we had a $2 move, which is pretty expected. It's a pretty expected move, right? So then we're going to continue going back and we're going to just look for more earnings dates. So I'll kind of speed up this process here. We can see, oh, here's another one. 22.1 to 23.2. That's another $2 move. But the key thing you also have to realize is we're looking at average daily range in terms of dollars, right? So we had a $2 move there and a $2 move there. But the key thing you have to realize is the $2 move on a $20 stock, it's about an 8 to 10% move. So with that being said, we can expect a potential intraday 8 to 10% move as well. So now if we go back to QFIN from this day that had the earnings, what was the earnings low? Right here, 43.7. What was the high? 48.5. So we had about a 10% intraday move, which lined up pretty well with the previous average daily ranges, average trading ranges, whatever you want to call it. So we were able to take a trade that day, and I was able to get, I think my runners went to about 150% on April contracts. And keep in mind, at this time, this was Monday, March 17th, and I took 1 month out contracts just to be safe. And we were still able to get over 100% profit on that trade, despite having a 1 month worth of expiration. All right. So that is pretty much the breakdown as far as how I look at previous average daily ranges. So now we're going to kind of talk about the other steps here, right? So we talked about the average daily range and why that kind of checked the box. Next, gapping under or over a key level. In this case, it makes it even easier. It does not take a rocket science. So I'm just going to scroll back in the chart just so you guys can see this, right? This is pretty much the entire history based on the monthly perspective of CubeFin. This was the previous all-time high over here. This was the all-time high that it tried to break here. And so now if we look, what is this doing, or what did this do? This pretty much gapped above or dang near close to the previous all-time high. And so another key component here, and this kind of ties into number two as to why we look for a gap above or a gap below a key level. One of the biggest things we look to do and we look to see post earnings, who is in control, buyers or sellers? How do we determine that? It's very simple. For those in the Discord, you know I say this pretty much every single day. Buyers are in control above the opening print. Sellers are in control under the opening print. So what do we want to see? We want to see some type of dip that gets back above the opening print. And with just basic psychology, what does that tell us? If the price is dropping, that means there's more sellers than buyers. If the price is rising, there's more buyers than sellers. That's as simple as it is. So we want to see at some point, if we're looking to go to the upside long for calls, we want to see at some point there be some selling pressure and then buyers taking control. And so we were able to get a really, really nice entry in here, and we got over 100%. And that's pretty much it as far as the level, right? You know, to cover how I get these levels, it might take a while. So just trust me that these levels are accurate and these levels are correct. And the last key component here, right, is that as I mentioned earlier, what did this gap do? It flipped the daily back to the upside. So when you're getting an ignition, when you're getting a catalyst, you know, you're getting this catalytic move to push the trend higher, you're more likely to get that follow through. And as you can see, we got that 10% intraday range. So we were able to really take advantage of that expanded ADR because, like we saw, most of the days were closer to that, you know, 250 range. And then lastly, this is kind of the most self-explanatory, especially in this example. We want us to have really big targets. And so in this case, we're at all-time highs. The sky's the limit. You know, I'm not here to teach you guys how to use Fibonacci to do measured moves, but you know, we do all that to get some targets at times. But for sake of this, all we're going to do is just trim on impulses because we're continually making new all-time highs and look for whole numbers to trim at just to make it very simple, right? If you're a trader, you know nothing about measured moves, Fibonacci, targets, you know, none of that stuff. Just trim on every impulse you see intraday and then just ride the wave. And so that's pretty much it as far as this example in particular. We have a lot more examples to cover, and I want to make sure that this is crystal clear what we're looking for in every different setup. So I have a bunch of different tickers to cover, and I also have
Hey,
up
before
and
you
down.
do that, Zach, before you move on to another one,
Yeah.
just want to remind everybody really quick to make sure that you guys are entered into the Tradeify and the Yankees tickets giveaway. You need to be filling out the form that is in the group chat. I just posted it. Callan just posted it. And then we will be doing the giveaways at the end of the session. And if you guys have any questions, you guys can pop them in the chat, but we will do a Q&A session at the end as well for Zach to answer any question you guys might have. Thanks, Zach.
All right. We're good. So next example here, guys. Let me know. Has anyone ever heard of this ticker here? GRMN, Garmin. Give me a one in the chat if you've never heard of it. Someone knows the company?
I heard of the company.
Yeah. Well, you know, I never heard of the company and I never traded the company. Okay. And so honestly, it doesn't really matter if you ever heard of the company or not. I never traded the company. Neither have I ever traded, you know, so QFin I never heard of, never traded. This one I never heard of, never traded as well. And so the theme I'm trying to show you guys here is that you don't have to know anything about the company. Do you think I researched their balance sheet and what they did on their earnings call and their EPS? No. I looked at the earnings calendar, and you guys can probably already start to see you know, without me even doing any analysis, you could see a similar kind of, you know, trend that we're going to see here, right? So if we go back, I'll just show you the bigger picture view. Garmin trading above the all-time highs, right? We broke out of this previous all-time high looking at the monthly perspective. And then what did we do again? This was the previous all-time high around that 223. We gapped up, clean gap up around this 215 up to 238. What else did we do? We dipped and got back above the opening print at some point in the day. And I'm going to show you my entry on this one because this one was a little bit different. Okay. Additionally, you guys can see, and I make it very, very simple with the green arrow. What did we do? The daily flipped back to the upside, right? So you could see here that the daily flipped, which gave us that expanded move, right? And so again, we're going to do the same thing that we did. We're just going to look at previous earnings days. And regardless if you know the company or not, regardless if you traded the company or not, this is step one. So if you're only going to take one thing away from this, it's look at previous earnings intraday moves, not gaps, intraday moves, and see how big or how, maybe lack of size there is. If you're not really seeing it makes many moves intraday, maybe it's one of those stocks that just gaps up or down a lot, not much you can do. But as you can see, look at this. We gapped up from 165 all the way up to 186. So it's over a 10% gap. Already gapped up 10%. And I know personally, I used to say, oh, screw that. I'm not going to trade it or I'm not going to touch it. Or maybe even I'll try to short it. There's no way it goes higher, right? I'm sure so many people have had that happen. Oh, there's no way it goes higher. Sure enough, it goes from 186 all the way up here to 207. So that's another $20 move intraday. And keep in mind, that $20 move is much more substantial than what a $20 move would be now. And so you can see the low of this candle was roughly 230. The high of that candle was 246. So we got about a $16 move there. And so to show you the exact entry, right? This is maybe giving away too much sauce. Forgive me, everybody, if it is, but I'll show you exactly where I took the entry. And we were able to, I believe, get 120% on this trade. So I'm not going to explain in full, but basically what I was looking to do is going to the day because we were at brand new all-time highs. There was no levels to play off of besides potential Fibonacci or measured moves. I was looking for some type of dip to get back above the opening print, and then that's when I was going to take my long entry. And without getting too much into my EMA system, because there's a lot to cover when it comes to the EMAs and the way I use them, I said two things. It becomes very simple for my entry, and I'll be very patient for it. One, I need us to dip and get back above the opening print. What did we do? We had a pretty harsh sell-off, got back above the opening print. What I then wanted to do was the next test of the 8 EMA on the 5-minute chart, I would buy calls. And that's how simple it was, and that's why I trust my system. For those that don't know, the yellow line right there is the 8 moving average. The blue is the 20 moving average. I took my entry right around here. I truthfully didn't really know what to target. We were at brand new all-time highs. So I decided to get 1 month out, $250 calls. And we got a move from around 235 up to about 245. And those calls went 100%. Again, same deal, same execution. It's pretty much the same exact trade that I took before, just slightly different the way it looked, right? But you could see that so far, 2 examples. I have plenty more to show you. It's all a common theme. I'm going to show you some downside examples as well, because, obviously, if anybody knows what's going on in the market right now, I don't know what's going on. I don't know what's going to go on in the future. That's none of my business. I focus from day to day, but it hasn't been pretty lately. So to have a setup like this that we can take advantage of, even if the market's going down, that's what's key to me, right? So just recapping this again really quickly. Why did we like it? It was gapping up to a key area. In this case, there was no key level to play off of per se because it was well above the all-time high, right? Got back above the opening print. Big target, big moves pre-earnings in the past, big intraday moves. And so, ooh, did my screen share just stop?
Yeah, try it again. Sorry, I had to make a change real quick.
All right. There we go, guys. So that's that trade. And so for those that follow me on social media, you may have followed this little journey. And I know I shared it in the Discord as well. But I've been really confident, especially Q4 of last year was when I really started taking advantage of these moves. And so I loaded up $1,000 into my Robinhood account. I don't really remember exactly when, but it was the beginning of February because I was waiting for the big earnings push. We usually have like a 2 to 3 week span where we have tons of earnings. And I don't remember exactly how many days, but I believe it was under 2 weeks. Just, excuse me, I took 7 trades. 6 of those trades were post-earnings trades. And besides the first trade where, with $1,000, I had to put in $700. I was able to take my account from $1,000 to almost $11,000 in 7 trades. This was not full porting. This was not pre-earnings gambling. This was all the exact same setups that I'm showing you guys here. And I'll be showing some of these trades that I actually took on that account as well.
Hey, Zach, can you repeat that number one more time? 1,000 to what was it?
Yeah, so I took the account in just 7 trades in about 2 weeks without full porting, without taking entry pre-earnings. $1,000 to about 11,000.
Okay. Just wanted to make sure everybody heard that clearly. Thank
Yeah.
you.
Yeah, and you know what? I'm a big believer in being as transparent as possible. And it's not going to be as, impressive if I just show you an $800 gain, and, because you don't know, I could have put $20,000 in for that trade, right? But what I do really take pride in is when I make a $1,000 profit and my entire position size is only maybe $800 or $900. It shows me you don't need a lot of money to make money. And it hopefully shows everybody that you don't need to be full porting. You need to be pre-earnings lottoing. You can make money and be systematic, especially with these post-earnings trades. And so going on to the next trade here, some of you actually, may know me as Zach Ma. In the past, I've had a lot of success trading Alibaba. Some of you, in the Discord especially, probably banked in February when we caught this crazy run up into earnings. A lot of you guys probably saw this was my biggest trade of the year, $17,000 winner in Alibaba. But I'm actually not going to talk to you about the swing trade. I'm going to talk to you guys about the short that I took. And so the key thing here with Alibaba now, this is the first short side setup that we're getting, right? This is now also the first one that is a bit different. We're not gapping up to an all-time high. Instead, for a short side trade, what we're potentially looking for is gapping up into a resistance point, okay? So I'm going to zoom in here and show you the exact setup and what this looks like to the downside. So what do we want to see for when we go long? We want to see us drop a little bit and have the price go back above the opening print. So the same thing happened here. So yes, did Alibaba get a big earnings gap? Sure. But I remember saying this in the Discord vividly. If we gap above 140, I'm not looking for shorts and potentially would look for longs. If we don't gap above 140, I'd be looking for a spike higher and then at some point back underneath the opening print for shorts. And everyone knows I was the biggest Baba bull. We captured a huge move, but at the end of the day, when the chart tells you to take a trade, you take a trade. And so you guys can probably see pretty clear here. I'm going to just get rid of all my levels and stuff for right now, but you can see this was the resistance area initially. What did we do? Spike up. And, was there money to be made on the upside? Sure. But then we got a spike down and we got underneath the opening print right here. So I don't exactly remember where I took my entry because this trade was about a month ago, but it was somewhere in this region. And again, the key thing is when you lose the opening print and sellers are in control and we get extended, that's when sellers can really take over. And so you can see just as fast as we went up from, whatever this was, 138s up to this almost 145s. We dropped from 137 and change all the way down to 131. And I ultimately closed there because if I remember correctly, we had one of my EMAs. Yep, we had my hourly 8 EMA as support, so I ended up closing pretty much right there. But on the short side trade here, I was able to get over 100% profit as well. So despite my bias with Baba that I had for nearly 3 weeks looking for longs literally every day, hammering it, slamming the table, telling everybody, I'm going to try to hold for the home run. And a lot of people did. Despite all that, I still am able to adjust and adapt based on this strategy and look for a short side setup if it presents itself. And so I definitely wanted to include that one in there because I think as traders, it's very important to be able to adapt regardless of previous biases. And again, it was the same exact setup, just in the reverse. Now let me show you another one. We're going to hammer this home for you guys. Berkshire Hathaway. Everyone probably knows this. The Warren Buffett, right? But can I be honest with you? I probably haven't bought a stock in this, bought an option in this, probably even looked at this since like 2020. But again, what do I do every single day? I look at the earnings calendar, see what's going on. And so what I noticed is these previous earnings moves, we've gotten pretty decent moves. This one right here was from around 450 down to 437. It's about a $12 move. The one prior, 406 to 418, about a $12 move, right? And so, I went back and there was some more, right? So here's another one. This was a little bit of a smaller one here. But this one, 430 down to 409, about a $20 move. So I know there's a $20 move potentially in the tank there, right? I know it's a possibility, with 12 being on like the lower end of the larger moves. So again, what were we looking for? And these levels may not be still valid, but these were the levels that I went back and marked them that I was looking at going into this trade. And so this one was a little bit different of an execution. We didn't quite get a gap above level, but what I was looking for in this case is I was looking for a gap above a previous structure. And so in this case, we got a gap above the previous day high, as you can see. From this, we gapped above the previous day high. And then I was looking for us to simply break the previous all-time high. I figured if we broke the previous all-time high, that would trigger that expanded daily range for us to take advantage of. And Berkshire doesn't typically move a lot. And because of that, the options were not really pricing that in. So if we look at this trade, I'm going to break this down probably the most detail yet. What I was looking for on this trade, let me scroll back here. Scroll back. What I was looking for on this trade is I wanted to see, like I said, a break of the previous all-time high, which we got right here. This was the break. From there, I wanted to just see a 2-minute close above my key level at 489.6, and we got that. And then the last piece of the puzzle here is I wanted a retest of the level. Just like anything, I want to see a retest. I want to see the price go down and then come back up. Why? Because that shows, regardless of the time frame, it could be on a 2-minute chart, an hour chart, a daily chart, whatever it means. It means that buyers were in control, sellers took over, buyers back into control. So if we scroll back and look at the 5-minute chart, gotta scroll back, sorry. If we look at the 5-minute chart, we got a picture perfect setup for us where we got the 2-minute close above, 5-minute came back and retested. And as we came back above and broke that previous high, which is the all-time high, that's when I took the entry. And this trade, so I took the 500 call here. And this trade went almost 100% in just this one candle. We went from 491 in the same candle up to 497. I eventually held my runners and got over 100% at this point here. But this just goes to show that, not every single setup is going to be 100% textbook. It's not going to be 100% clean. But by understanding price action, market structure, and just how these post-earnings moves happen, that is how we take advantage of these moves. Next one. And so this one actually, this one's from February 14th. This one was one of the trades that I did take on the small account. Here we go. And so we have a key theme here, right? We have a key theme. At this time, the key level here was the 47.6. We gapped above it. We don't always have to retest it. But what's the one key thing that we need? We need to dip, have some sellers present back above the opening print. It's the same thing for the opposite. Like I said, I'm trying to drill that in your brain with different examples, different looks, different tickers, right? So for this, if you look in particular at this setup, we've really been range bound for months, if not years, in this DraftKings. And so I knew we could get expanded move up. So my targets going into that day were 51.6, and then 54.7 and 53.4. I'll show you the exact entry one more time. Going back to February 14th, again, it's all the same. We looked for a dip back above the opening print. And so what did we get? A dip back above the opening print. And then this trade just immediately rocketed. And so one thing about this trade is that I took, I believe my position size was about $900. That was my entire position. Again, for some, that might be a ton. For some, that might not be a lot. For where I'm at right now, it's, a reasonable size. But I didn't trim any. because I had confidence in this setup that we were going to go higher. And so I was able to hold my entire position for 100% profit, maybe even higher. I believe my net return was about $1,000 on this trade. The key thing for me is that I wanted to see how we reacted to my first resistance level here. We actually had a 5-minute close above. Then we really didn't reject much and then broke back above. So for me, there was no reason. Could I have trimmed some? Absolutely. But this was a risk I was willing to take. Why? Because of how confident I am in this setup. I know that these setups resolve higher. And guess what? If I was wrong and this starts to reject, I would have still been up 30, 40, 50%, which is still a great trade. If you can make 30, 40, 50% with a high probability setup in what is this, 30 minutes? Who's going to say no to that? Long-term investors hold for years, months, trying to get 12%, right? So we just got to put things in perspective. And so for me, this hit my 53.4. I think I was about 110% profit. And I was like, you know what? Could this go higher? Sure. But I'm just going to sell at my, take profit 2 area in full, happy with the gains, wrap it up. It is what it is. And, oftentimes when you're not greedy, I always say when you're not greedy in the market, the stock gods reward you. And sure enough, we kind of retraced, went sideways and kind of finished up at the same point that we were at. So really nothing lost in there. So that was the setup there in DraftKings.
Hey guys,
Now, go ahead.
hold on real quick, Zach.
Yeah.
Callan is popping links in the chat where you guys can see Zach's P&L screenshots from these plays. So we can't post like pictures in the chat, but we are posting the links. So go ahead and click those. There's the DK and the Donkey Kong. I always like DK and G and call that Donkey Kong. Anyways, but there's that P&L. And then I only am seeing about 192 of you on our webinar or on the giveaway list. So I'm posting that link right here in the chat again. That means 73 of you right now are not eligible for our giveaways at the end of this webinar. So if you guys have not already, click on the link that the Stock Dads page just posted in the chat. We're giving away 10 Tradeify accounts and 3 tickets to the Yankees game with Zach. Yes, you have to be here to win. And yeah, so check the chats for links from Callan. We're trying to post those so you guys can see the fat gains that Zach is talking about. These are real. These are not, fabricated in any way. It's pretty dope. Hey, one more time, Zach. You took that 1K account to what was it?
Yeah, 1K to about 11K in 7
Okay,
trades.
yeah, sure. Okay, just want to make sure I
Yeah.
put that correctly.
But
All right, I'll let you have the chat back.
appreciate it. But guys, also, obviously that's great and, maybe not feasible for most beginners. But the key thing that I'm trying to stress, when I talk about these gains is you don't need a lot of capital, relatively speaking, right? So many people say you need thousands and thousands of dollars, right? I'm trying to show you that you can have relatively modest positions and still come out great. Now let's just say even you can only grab 3 contracts and maybe it's like $180 to $200 hold position size. With an 100% trade that you have confidence in, right? Even if you maybe trimmed one earlier to be happy, you can still come away with $100 to $150 on that trade using very, very reasonable position sizes. And I'm sure most, if not everybody in this chat will be stoked with an extra $100 to $150 a day. If you're not, I don't know what to tell you. I wrote the other day in the Discord chat for those that, are not in there, I'll share with you. I worked at my father's shop last weekend. And again, I would work there for free, but he insists on paying me something and he pays me $150, right? And so for me, it really puts things into perspective when you make these gains and make this money in such a short period of time. Be grateful, don't be greedy, and take your gains, right? At the end of the day, if you're ever confused with when to take profit, when to sell, when to trim, I always say this, and it may not be correct, but to me it is. If you always sell when you're happy, you will never have any regrets. It's that simple. So going on to the next example, guys, I do want to show you some more downside examples because 1, we haven't done as many of those. 2, just realistically, the market's not looking great, right? So, excuse me. The next trade we have is Adobe. And then the one after this, guys, I think you guys will be a little surprised with, right? But this is a key thing, right? So I'm just gonna get rid of all my levels for 1 second. Boom, they're gone. Adobe dropped from $438 down to about 404. So, not doing the exact math here. That's about a 10% drop. Okay. Adobe dropped 10%. And again, this is not some penny stock. This is not some no-name company. Everyone knows Adobe for the most part, right? But most people, again, may say, I don't want to touch it. It's down too much. Or it's got to bounce. It's Adobe, right? This is me showing you, once I put all my structure back in there, that these thoughts, and again, I had all these thoughts in the past. These thoughts are not the way you should be thinking, right? Again, I'm not, you guys are not going to know my exact levels, right? You guys are not going to know the exact way I use my EMAs, but at least by following this structure, it could at least prevent you from potentially, for example, taking a trade like Adobe, right? And, for some reason, okay, there we go. Perfect. So with Adobe, going to the day, I said it's very important. If we don't gap under 406.5, which is my key level, I can see us bouncing because yes, we are extended. However, if we gap, and the key thing, right, most times is the gap. If we gap under 406.5, I will be looking for shorts. And it sounded crazy. And when I wrote it in the Discord, people thought I was crazy. But I said, if we don't if we dip under 406.5 on a gap, we have nothing until 373. And again, sounds crazy. We just dropped 10% on Adobe. Adobe's not some no-name penny stock, right? Adobe's a big, company. And this level, just so you guys know, I'm not putting random levels somewhere. This level comes from all the way back here from this previous earnings run up here in 2023, right? This was the level that I had. And so if we go back to Adobe, sure enough, what did it do? It gapped under the 406. What did it do next? It bled all day long. And I remember taking a trade off of this. And so again, it's not much. It's not much, but this is just showing you different examples again, right? Dip under the opening print. Sorry, excuse me, a pop up, slight pop, right? Only a couple bucks, but then the buyers immediately took control, excuse me, the sellers immediately took control and slammed this thing down from 404 all the way down to 391. If you missed that entry, no worries. There's many entries along the way on the 5-minute 8 EMA here. You were able to capture many different entries all the way to we almost hit our 373.79. I'm very sorry we missed it by about 80 cents. I'll give you that 80-cent refund. But hopefully, if you guys are able to take this trade, the $30 in between would have made up for it, right? And so it just goes to show you that, again, even if you're a little confused what's going on, at least just switching your thought process to maybe, oh, it's down too much, it's got to bounce, or it's down too much, I'm not going to touch it, right? There are some actionable things you can do with these setups despite being down a lot. This one here is the one that potentially could blow your mind, change your thinking, right? Maybe you guys know this stock, maybe you don't. This actually was one of my favorite stocks to trade in 2022, 2023, when we were kind of climbing out of the bear market. But for those that don't know this stock and maybe don't know what happened to this stock, Trade Desk was a ticker that I loved trading. As you guys can see, in 2024, it was very clean, really respected the EMAs, for the most part. Grind it up, and then it had this nasty earnings dip. It dropped all the way from 122 all the way down to 85. And I don't have it on this screen for some reason, but I had a key level. I believe it was at 86.50, I believe it was, or 85. Yeah, 85.60. That's what it was. I flipped up the numbers. And then if you look, the next support was right around here. So again, sometimes it doesn't happen all at once, right? It doesn't happen all at once, but it was kind of the same deal. We got a gap underneath the level, which for me for me, that was no longs, right? Longs off the table. And despite this name dropping from 122 down to 85, a $40 drop, it still had enough room to drop another $5 intraday. Obviously, this one caught some extended selling, and I'm not here to tell you that I would have predicted this move down from 85 all the way down to 53. But if this move tells you anything, it's what I just mentioned before, where it's very simple. The idea of it can't go any lower, the idea of it's got to bounce, get that out of your head. If we lose key levels, right, You know, this is an expression some people may know, some people may not. The market can remain irrational longer than you can remain rational, right? And so even if you're just buying stock, common shares, if you decide to buy the dip here in another couple weeks, you know, you're down another 35, 40%, right? So that was a pretty ugly one there. This was the most recent trade post earnings that I've taken. Lulu. Okay. This was a little bit more of a funky trade, so I'll break this down. But, you know, we had a pretty clear bear flag here on the daily, so it already was bearish going into it. Again, I don't need to trade it beforehand. I know the overall market sentiment, overall market structure. I already kind of know what's going on. Does not matter to what happens next because I could have been wrong and it could have gone higher. What I did know now, zooming in, the key level that I wanted to gap under was 306.3. And then I had all these levels that also lined up afterwards. And so I knew as long as we were under this 306.3, that's all that mattered to me. I don't care really where we go, what happens next from there. I'm going to find an entry to go short. And so for me, what am I going to look to do? I'm going to look for some type of pop that gets back under the opening print. So this setup in particular was a little bit different. I'll break it down for you really quickly here. This setup was actually a bit unique because we initially had a dip that got bought back up. But then the second candle of the day right here was what was clear to me. And I talk about this in depth. You know, I can't do it right now, but every candle tells you a story. In this story, what is it saying? Well, we opened the day here, we dipped to here, and we came back up to here. We did get back above the opening print. So in theory, this could be a buy, right? Obviously, we have to wait for confirmation. We can't just fire away. But my plan was always short. And then what did we do? We slammed down hard. We slammed down hard, back underneath the opening print, back underneath my level. And so it became simple for me. We had some buyers try, but the buyers clearly weren't good enough, right? Sellers are in control back under the opening print. And so now not only do we have our, the buyers being weak, we actually had a failed attempt. So when you get a failed attempt, what usually happens? The opposite in theory, right? So I took my entry right here. I took the puts. I believe I took the 285 puts, and my stop loss is above this previous high. So we're only risking a couple bucks, right? Target's way down here. Could have maybe trimmed some here. I decided not to. Decided to trim some as we got down towards this next impulse down here as we got near my next target. Trimmed a little bit more as we got down to 289. And then from there, every impulse I take some off. In this case, on this day, we didn't quite hit that 285 till the next day. But 287, pretty close enough, right? And from this point here at 299, we caught about a $10 to $12 drop. And keep in mind, a $10 to $12 drop after we already dropped from 341 down to 300. We already had an over 10% drop on Lulu, showing, again, there's more room in the tank. You know, it doesn't need to bounce just because it's down, right? Again, there are factors that come into play, such as, the previous ADR. I haven't been talking as much about the previous earnings moves because at this point, I don't want to spend too much time on the previous days. We can all go back in time and do that ourselves. We're just going to trust me here that all of these are sufficient enough to have post earnings intraday moves that are viable for these setups, right? And so that's the downside move there. That one, Adobe, TTD, all showing that low can go lower, essentially, right? I have a couple more examples I want to talk about before I wrap it up here.
All right, guys.
But again,
I'm just gonna interrupt one more quick time. Make sure that you guys are getting on the wait list for the giveaways that we'll be doing towards the end of the webinar. That is for 10 Tradeify accounts, 3 Yankees tickets. You have to be on that list that I just posted a link to in the chat. And don't forget, we also have a special opportunity for you guys coming very soon. So make sure you stick around for that as well. I want a quick heat check here, guys. Drop a 1 in the chat if you're loving the sauce that Zach is dropping right now for you guys. You guys learning stuff? I love it. Look at that, Zach.
awesome. Love to
Killer.
see it.
People are loving it. This
Love
is
it.
some crazy stuff, guys. And I want to reiterate, this is one, and you guys are getting a good portion of the strategy, but one chunk of one of Zach's strategies. Zach trades both futures and options, and this is not even his primary money maker. This does make him some nice spending cash, as you can tell from earlier when he talked about turning 1K into 11K, and he uses this regularly. But this is just one of the crazy strategies that Zach uses on a regular basis with a lot of high probability, good setups that are very reliable and conservative. Zach is not a degen ape gambler like you will come across often. So Zach is one of the safest traders on our Stock Dads team and one of the most consistent as well. So love this, love what you're giving out, Zach. Obviously the people are loving it too. And got some people talking about mastermind in here, maybe a little foreshadowing there as well. So get on that meeting, or I just read the word meeting as I said that. Get on that wait list for the webinar, and I'll let Zach keep on rolling.
Yeah. So we got 2 more quick examples, guys. Obviously I want to share enough examples, but I don't want to bore you, right? I want to show you all different types of stocks, all different types of setups, because I make my system very systematic to where there's no guessing involved. It's very simple. If X happens, Y should happen. If Y fails, trade fails, right? I don't really like talking about myself much. And, by default, I kind of have to as part of this position and in social media. But, I've tracked at this point well over 1,000 option trades over the last 4 years. Pretty much a 73% win rate. But ultimately, win rate doesn't matter, right? And my goal and our goal as traders every single day is to reduce the losers, make them smaller and smaller and smaller. Even, the last couple of weeks, I've been making adjustments to have the losers be smaller, be more, kind of proactive in this volatile market. And then implement more strategies like this, right? Where have your winners be big. And again, this strategy of mine, it's not just something that happened overnight, right? This has been in the works for a long time. And as you can see with some of these past trades, right, with the DraftKings, the Lulu, right? And I'm going to talk about 2 other trades that I took on the small account on Robinhood that helped me kind of propel higher. For these trades, I'm not taking trims at 10%. I'm not taking trims at 15%. I'm trusting my strategy because to me it has been proven, and I'm holding out for bigger winners, Also for me too, a big thing, I may not get the top percentage that I, am able to get on a screenshot, because you guys have probably heard the expression, if it's good enough to screenshot, it's good enough to sell. So for me, my number one priority is locking in the gains, because I'm sure you guys have been there where you're trying to take a screenshot, send it to somebody, maybe your friends, and then next thing you know, it reverses on you, right? So for me, I'll take a screenshot quick if I can, but ultimately I don't care, right? So 2 more examples here. This one's an LLY. This was kind of the same deal again, right? We're getting this nice gap up. In this instance, we did not gap too much above my 845.5 level, but I wanted to see a break. And in particular, why? Because as you can see from here, 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 and then right here, we have some pretty clear resistance in this general zone there, right? So I figured if we can get a break of that, I would be aggressive in taking a long entry. So let's see, the data, that's February 6th. So let me go back to February 6th to show you guys exactly how I took this trade. And again, with some of these trades, I'm very aggressive because I'm super confident in these setups. It may seem like gambling, right, to the common person, but if you know exactly what to look for, it becomes super systematic and really can change your trading, right? I'm almost debating taking no day trades ever. My main bread and butter is swing trading, as everyone knows, or if you don't, that is my bread and butter. But exclusively day trading just these setups. And you can see right here, you guys can probably tell me what I saw. We opened up here, we dipped, got back above the opening print, and then look at this candle. So for me, this is a rare occasion where I'll take, maybe a slight breakout, but this breakout quote trade happens not just because I'm spamming a buy. It's because of this key part right here where we dipped and got back above the opening print. We got back above the opening print. So once we kind of got back above this 846, 847, I took entry, and then this trade was done. Did I miss out on an even bigger winner than I could have had? Absolutely. But I closed most of my position here. And I think I held maybe one runner up until like the 878s. and then went almost to my final target there, 890. So again, why did I become so aggressive with this setup? Is because LLY, if you look in the past, look at this bar here, 825 to 877, about $50 intraday move right there. 768, 857. That's a $90 move, right? So LLY is no, stranger to these big intraday moves. 835 up to 887-ish, $50+ move. And again, this is not guessing. This is not hoping that we're going to hit my targets. It's knowing that based on previous data, we have a very good chance of getting the expanded range, the expanded ADR, ATR, whatever you want to call it. And it's literally that simple. Again, so if you can only take one thing away from this strategy, you're like, oh, what were the levels, the EMAs? I didn't quite understand that. Go back in time, see how they moved intraday on previous earnings. Because again, look at this one, for example. We dropped from 903, 904-ish down to 797. And we had a $90 intraday move that day. Despite already gapping down $100. So if that doesn't tell you the power of these intraday moves, I don't know what does. And obviously I can probably go back in time and show you even more gaps and moves in intraday, but I'm going to get into my last example here of the day. This was also on the Robinhood small account. And this was not a small
Guys,
account.
hold on one
challenge.
second here, Zach. Before you jump
Yeah.
into this last one here,
Yeah.
sorry to mess with your flow.
ahead.
I want you to save this and the Q&A for after this announcement here because I want to give people a little bit of time to act. But before I make any sort of special announcements, what do you guys think of this session today? Give me a W in chat if this has been pretty sick so far. Awesome. Guys, Zach consistently gives like more free game or more game in his free stuff than most traders you'll come across even in their paid stuff. So if you don't know already, Zach is going to be running a mastermind within the next few weeks here. It'll be his first mastermind ever. It's going to be his OG class, so his 1.0, which is obviously always very near and dear to every analyst who runs a mastermind. You know that we at Stock Dads don't allow anybody to run a mastermind. We allow people who we feel like not only are great traders, but we have a lot of great traders, but not everybody on our team is a great educator. And Zach is one of the best educators on our team by far. I do want to go ahead and kind of talk a little bit about what that mastermind is going to look like. If you guys have been a student of Zach, because Zach hasn't done masterminds, but he has done a lot of one-on-ones. He does trade live constantly. If you guys are a student of his or follow him, just drop in some thoughts in the chat while I'm talking here about what Zach has meant for you and your trading strategies. But guys, Zach's mastermind, if you think that he's given a lot of sauce right now in a free webinar, I think you can only imagine what his premium mastermind is going to look like. It's going to be absolutely incredible. There's going to be like more value packed into this mastermind than I think any that we've run before. Zach has beaten himself up, left and right to sending us, like how he can make this the most value packed, the best possible, course curriculum. Like he is really hustling to make this just an absolutely incredible experience for the people who decide to join the mastermind. The problem with masterminds, though, transparently, is that we can't take everybody. We cannot take every person that wants to take the mastermind. There is an application process because if we do, if we take everybody, there's too many students, and Zach can't give each of them the individual attention that they really need to be able to actually learn from it. And it just kind of becomes like, well, why not just record a course and sell it, like on the side, like having the actual in-person live masterminds, well, not in person, but live masterminds, where you can actually engage with your classmates and with Zach and stuff is incredibly valuable. So with that being said, we do have an application process for the mastermind coming up. That is going to go live. The applications are going to go live in about a week and a half. Actually, no, correct me if I'm wrong, Dave. What date do we have for the application release? I believe it's the
Next
7th.
week.
So it's Monday. Man, April's already here. That's crazy. But yeah, it's gonna be the applications are gonna go out on the 7th, so that is a week from yesterday. And we're only gonna be able to take, a select number of people, and the application process is really heavily weighted. But if you guys have not been in our master or in our pre-mastermind webinars before, like this one, we do offer a special opportunity for those of you that are here tonight, and tonight only. And this opportunity does go away at the end of this webinar. The mastermind, for those of you asking, is $19.97. That's $1,997. Nobody asked me if it's $20. But it is $2,000. But as you guys can see, the strategies that this strategy alone has made Zach over $10,000 in the last month on a 1K investment. Obviously, stuff like that's not guaranteed, but I believe most of you, if you were given an opportunity to spend 2K to learn a strategy that's going to make you 10K in a month, probably a pretty good investment, pretty good ROI there. And that's one strategy that you are learning right now for free. So imagine the good stuff. So with that said, those of you who are on this call tonight do have the opportunity to bypass the application process because you are showing us something about yourself that you're willing to show up. You're willing to sit here for an hour and a half and learn about stuff when you haven't put any real skin in the game yet, right? You haven't put in, the money or whatever. So we know that you're dedicated enough to be here. So we definitely are going to give you guys a special opportunity. I'm going to post some links in the chat right now to go ahead and join tonight and get early access to Zach, get early access to the mastermind group, to start to meet your classmates, to bypass the application process, and to guarantee yourself a spot in the mastermind right now. We are going to do something a little bit different this time. We've only done this with our last 2 masterminds. We've never done it prior to those last 2, but we are going to offer payment plan options. Okay. So we do offer a 2-month payment plan, a 3-month payment plan, and a 4-month payment plan option. The 2-month payment plan, it'll cost you $50 extra total. The 3-month will cost you $75 extra total, and the 4-month will be $100 extra total. But that's a small price to pay if you're not completely liquid to be able to put down the full $2,000 right now, or you can just pay the $19.97 all right now and get that done as well. And the last thing that I'll mention is before I post these links, because I don't want to post these links and have people jumping the gun, because I know it's going to be a mad dash for these links. If you are a GOAT member with Stock Dads, which means you are a lifetime member of the Stock Dads community, or if you are a previous mastermind student, you do get a discount on these. So you need to open a ticket in the Discord before purchasing so you can get a discount code before checking out. So with that said, the links are now in the chat. So you guys can click on those links, bypass the application process, choose the link you want, go ahead and lock yourself in, and we will be able to get you guys in and rolling early, and Zach will be able to kind of get you guys started, do some mentoring early on this next week and the next couple weeks while we're doing the application process and all that kind of stuff as well.
So I want to reiterate what you said. If you are a Stock Dads member and you are a GOAT, or you have taken a previous mastermind and you want your discount, you gotta open a support ticket in the Discord. They give you a custom link. If you go the old route, if you click on one of these links and you buy it that way, everything gets
yeah, I ain't discounting you if you buy it. You're not listening.
Yeah, you don't get geschmiggled. So
you don't, if you're not listening, if you want your discount for being a GOAT or a previous mastermind student, open a support ticket for sure. Yes, GOATs and previous mastermind students are allowed to do the payment programs. The discount for goats is 10%. The discount for previous mastermind students is also 10%. And if you are a goat and a former mastermind student, you stack those and we do 20%. How to put in the support ticket, go to the Stock Dads Discord and click on the support ticket channel, and you will be able to open up a support ticket from there. All right, but last thing, and I'm gonna pass it over to Zach to keep kind of rolling a little bit here. You guys only have access to this opportunity to bypass the application process through the remainder of this webinar. Okay. So when Zach is done teaching, once we do the giveaways, that opportunity is gone and you will have to apply. You do not have to buy it tonight. If you want to buy it tonight, you will be able to bypass the application process. If you do not, you will have to apply on Monday. Okay. All right. With that said, Zach,
Awesome.
kind of keep rolling and I'll interrupt you a few more times, I'm sure.
No worries. Well, I'm pretty much, I have one or two more examples maybe left in the tank. But
And we
the
will
one
do
thing I will
Q&A after those as well, Zach. So
yeah, for sure. The one thing I will say though, I'm like I said, I don't like talking about myself, personal accomplishments, even like, kind of dating back a bit, when I played high school baseball. It's weird even saying this because I never would say it at the time, but my sophomore year of high school, before I unfortunately got hurt, I was one of the top prospects in like the Northeast. For those that know baseball, I hit 740 my sophomore year, which was, just not heard
That's
of. But I
insane.
never would talk about that. And you know, I'm naturally introverted as a person, but once we start talking about things I care about, you won't get me to shut up. I'm very passionate about teaching. I think Dave or DJ said that, I used to teach, baseball, and it's kind of weird full circle that I used to teach baseball and now I'm teaching stocks. So it's teaching's in my blood. And so I really do enjoy it. And actually it's funny. I did a Reddit Ask Me Anything yesterday, and someone said, if you trade and you do this, why do you teach? And like, truthfully, right? And it sounds sappy. It, really is like fulfilling to me to help others, right? And it may sound dumb and maybe a waste of time for some other people, but I genuinely enjoy it. So, in the past, I took, lessons, I took mentorships, I took courses. And from my experiences, at least, I felt a lot of these mentorships per se were not as much of a mentorship. It was more, you're taught and then that's it. Maybe some check-ins, but that's kind of it. I really want to be able to like, sit there, and the expression I always use with some of the previous people that I've worked with is, when you ride your bike, you learn to ride your bike, right? At some point you take the training wheels off. But when you take the training wheels off, your parents are still there by your side to make sure you don't fall over. And that doesn't matter if that process is a week, a month, a year, whenever you learn how to ride your bike properly, whenever that comes. But until that point comes, your parents will still be there by your side and make sure you don't fall over. So that's the expression I always use. And, I'm going to get into this last example right here, guys. And this, again, was one of the trades that I did.
Oh, oh, watch me mute. Watch me how fast I'm going to mute. Oh, he muted himself.
lightning.
This was one of the trades, again, guys, that I took on the small account. I believe it was right here, Upstart. Yep, February 12th. I don't have the current levels, but we're just gonna run through this example really quick, because I want to get to the Q&A as well. But it's pretty much the same exact strategy. At this point, we did have a level that we gapped over. I believe it was 80 point something. Yeah, I think it was like 80.2 or something like that. And so this was a pretty easy trade. Honestly, this trade lasted about 15 minutes. We dipped down as soon as we got back above the opening print. Because of how long and extended this bottoming wick was, I entered. What did we do right away? Ran. If I'm not mistaken, I believe that the levels, I don't know why they're not on my screen. Yeah, I'm not sure why they're not here, unfortunately, but I believe the levels were 88.9, if I remember correctly, and then it was 90.4, and it was something like this. And I just took it off in full right here. And we ended up kind of just going sideways and ultimately going higher the next day. But I took next week contracts because I remember this was a Wednesday. I took the following week contracts, got about 50% gains, I believe, in here. And this was one of the final trades that I took to get me to that 10K mark, I believe. But ultimately, a really good trade. And again, you guys can see it's the same setup, some type of dip, some type of pop, the control over the opening print, and for those who don't know what that is, just very, very simple. The opening print is exactly where we open the day. The moment we start the day, that's the opening print. Because think of it like this. Think of it like a tug of war, right? Tug of war, it's neutral. Someone says go, both sides start pulling. Eventually, one side will overweigh the other side, right? And so at all times, buyers and sellers are kind of competing against each other. And so in this case, we get that dip, we get that back above the opening print. And, the rest was history for this trade. And, I have a
Guys,
couple more examples, but that's
real
really it,
quick,
guys.
while Zach's pulling up the next example, I want to just kind of review some of what's included in the mastermind. Masterminds with stock dads. I'm looking here and I'm seeing how many people in here have taken a stock dads mastermind before. Just give me a 1 if you've taken a stock dads mastermind before. All right, pop a 0 if you have not taken a stock dads mastermind before. I'm just wanting to gauge a little bit of a. Okay, so we've got a good mix here. Okay, so for those of you who are typing in 0 and have not taken a stock dads mastermind before, what a stock dads mastermind is, in essence, is basically you're going to have a 4-week crash course where you're going to learn every single thing that Zach knows. Zach's going to teach you literally all of the things that are inside of his trading brain, and it will become in your trading brain. You'll have lifetime access to all of the recordings. So even if you can't sit in on the class live each night, or you miss a class or whatever, no big deal. You're going to have a lifetime access to those recordings. Thank you, Devin. Devin popped in and says Stock Dads Masterminds are worth every penny. If you guys have had similar experiences with the Stock Dads Masterminds, pop a little testimonial in there if you wouldn't mind for me in the chat while I'm talking. But yeah, you'll have lifetime access to all the recordings. Zach is going to teach every single strategy he knows for futures and options, and he'll go deeper into this ER or this post earnings trading strategy as well, because you guys are getting a lot of it, but you're not getting all of it. And you will get every single thing that's in Zach's brain. Lifetime access to the recordings. You'll get lifetime access to a mastermind exclusive subsection in the Discord where you'll have access to talk to Zach and all of his students. So basically, we have little mini cohorts and in these mastermind groups that basically you all learn the same strategies and you all become little mini Zachs. And all of a sudden, there's an army of Zach traders sharing ideas, sharing. Look at this idea. Look at this trade that I can possibly take. Oh, you have support and study groups, like all this kind of stuff. You basically make friends. We have people that are doing meetups and stuff across the country with their students. You will also get access to some exclusive live content from Zach. So he'll be doing some trade recaps, reviewing things that he doesn't normally do live, doesn't show publicly. He'll review like his best trades, his worst trades, why he took them, why he shouldn't have taken them, so on and so forth. So you have ongoing learning opportunities from them. And then Zach is going to be doing a really cool feature that we've never done before with any of our other masterminds, which is going to be a Roth IRA challenge, which I'm going to let Zach explain the details of how he plans to run that, but it's something that I absolutely plan on following myself. But he is going to basically be helping us trade a Roth IRA account, grow it with the essential goal to double that Roth IRA, which could be monumentally profitable for us, and for a small 2K investment is very minimal when you consider the costs of paying financial advisors and all that kind of stuff to manage your IRAs and so on and so forth. So Zach, talk a little bit about the Roth IRA challenge
Yeah.
that'll be exclusive to mastermind students as well.
Yeah. So long story short, it doesn't have to be in a Roth IRA. I would like it to be for most. Because I know some people in different countries don't have access to these things, but basically it's a potential tax-free brokerage account. If you have a Roth for over 5 years, you can actually take out your principal, which is essentially your initial investment every year. You can take that out tax-free. So if you're just opening it up right now for the first time, in 5 years you'll be able to do this process. But if you've had one for a while, you'll be able to take it out tax free. So I've had mine personally for 5 years. So in the event that you do have a Roth for 5 years, my goal is to be able to double the principal, right? Which is just the investment you put in, and then you can take that out after 5 years tax free. If you don't have the Roth open for 5 years, you don't necessarily have to take it out. We can just keep compounding it, right? Um, this is something I've never done before as far as like a challenge, right? It's gonna be super low risk. It's gonna be involving only options that'll expire between 6 and 12 months, and primarily shares. The goal is very simple. It's just to make a fraction of a percent every single day. Mostly going to be actively swing trading shares. It's not necessarily going to be buy and holds forever. Not, occasionally maybe some covered calls, but when you're not dealing with a lot of capital, there's not as many stocks that you can actually do that with. But just know that this is something that I've been talking about doing for a while. And I actually just want to do it. And now this is just kind of the perfect time. Everything's kind of aligned. And again, you don't need to have a Roth IRA, but I just thought it would kind of be cool to have that extra little kicker in there, right? Obviously, you have a regular brokerage account, you double your money. Even if you don't withdraw it, who cares? You double your money. So that's the goal. Should be super awesome. And, super excited for that.
Yeah, and that'll be something that'll be exclusive to mastermind students as well.
Yeah.
If you guys are looking for more details of like kind of what the class will look like, Callan has just dropped a link into the Discord or into the Zoom chat here for the syllabus that'll be included with Zach's course. So you guys can take a look at that, see the course calendar, so you can see the days and times of the classes, the topics of the classes, obviously high level overview of stuff, and then something to keep in mind that if you do not, again, if you can't make the class, so if you look in the classes and you're like, man, I work these times, or, these classes are in the middle of my anniversary or whatever, right? You get access to those recordings. The recordings are usually posted the night of the class, or at the very latest the next morning, for you guys to rewatch, and then they're there for you forever to rewatch as many times as you want. We have mastermind students that have taken every mastermind that we have, and now they literally have access to hundreds of thousands of dollars worth of trading knowledge that they can watch and rewatch as many times as they want. And I guarantee you, if you guys ask the people who have taken our masterminds before, that once you've taken one, you kind of want to take all of them, because you take little pieces of everybody's strategies and you eventually or learn how to put together your strategy, right? So the goal at the end of this mastermind is not necessarily for you to trade Zach's exact strategy and just only trade Zach's strategy, right? The goal with trading should always be to find your strategy. So I see Ricardo's in the chat here. Compa Rick, right? He said facts that he's talking about just collecting the masterminds like they're Pokemon, basically, right? And Rick has taken aces, he's taken chefs, he's gonna probably take Zach's if I know him well enough. And I bet you Rick has pieces of every single person's trading strategy in his own trading strategy. Same thing with HE. And it's funny, I see all these names in here that have taken all these masterminds, and they're always the ones I see in our Show Us Your Gains channel, right? We have a Show Us Your Gains channel in the Discord where people can kind of show off the money that they're making by trading. It's funny, the ones that are mastermind students are always the ones packing that channel. And the ones that cancel, and the ones that, say they can't make money trading, the ones that say, this isn't for me, you look back at their accounts and what they've done. And I'm not saying like everybody can afford a mastermind. I understand if you can't. Okay. But for those of you who can, and you're worried about investing $2,000 into a mastermind, and you choose to not invest into a mastermind, but yet you'll go out and you'll spend, $500 partying on the weekend, right? Or you'll go buy, more Netflix and, subscriptions that you don't need. But the ones that are in the Show Us Your Gains channel that are making $500, $1,000, getting funded accounts, just absolutely printing day in and day out, and having people are quitting their full-time jobs and trading now full-time. They're earning money freedom, right? Those people are the ones that I always see with masterminds, and the ones that cancel and the ones that say this is terrible. They never seem to invest in their education. So, I just really want to reiterate a lot of those things. The goal is to enhance your trading strategies by a lot. Okay. Zach is one of, if not the best trader that we have on the Stock Dads team. I can say that about several of our guys, but Zach truly has like a super rock solid strategy and set of strategies that he uses for both futures and options, which is another really cool feature of this mastermind. Sometimes it's all options or it's all futures. This one, you're going to learn strategies for both, right? So you're going to come out here with being able to trade whatever you want, okay? And you're going to learn how to make money day one and through the rest of the thing. And then he's going to hold your hand. If I know anything about Zach, Zach is going to make it his life mission to make each and every one of his students profitable. He is probably like I can't see him being like he's going to be a no man left behind type of guy. Especially for his
Before you continue real quick, I haven't like said this yet, but one of the things that I was thinking about actually yesterday that I will be implementing is, just because I've seen how some of these previous masterminds have run, and I know just naturally people aren't going to be able to make all the classes. Maybe you got to leave early, come late, whatever it is. I'm going to be holding, I just in my brain called it a study hall, where once a week for however long we need. I'm just, it's not necessarily gonna be a Q&A. It can be more like a therapy session, Q&A, whatever you want to call it. But I'm gonna call it a study hall for once a week for an hour. We're basically gonna recap the class. Anyone has any questions, if you missed the class, I can give you an abbreviated version. So when you do watch it, it makes more sense because, some obviously when you have the recordings, you can't ask questions like in real time. So this way, maybe you can watch some of the recordings and ask the questions to me. And so that's gonna be like, a glorified Q&A, if you want to call it. And just touching upon one thing that DJ said as well, which really stuck with me, is that I mentioned when I first started, I invested in my education. And, as I said previously, I worked at my dad's bagel shop literally every day, almost open to close. At the time, he wasn't paying me much. And again, I would work for free, but he wasn't paying me much just because we were trying to just stay open. Right. And so I think at the time I was making like $650, $700 a week. It was cash, so a little bit better. Right. But I basically saved up for 1 month during the peak of COVID, and I basically took 1 month or so, maybe even 5 weeks or so. I forgot how much it cost, and I saved it up, and I bought my first like course or whatever it was called at the time, and it was scary because I literally was like, okay, I just worked 60 hours, so total 300 hours. And I'm just exchanging it for some potential education. And it was scary. I didn't really have a lot of money at the time. I was a college student. The only money that I had was working for my dad's shop, which would be gone like this. I'd be on a road trip. Anything I want to buy, I got to pay for the most part. So, it can be scary. But, I always like to say that, you know, I didn't go to school for any of this. I was just a baseball player that had an interest in the stock market, and I figured out my path. And then, as DJ said, I do get crazy because I want to make sure I'm over delivering, even if with high expectations. So, I want to make sure I absolutely crush all expectations and make sure that, no man gets left behind. So that's one thing you're 100% can get with me. I will say that.
Absolutely. Yeah, guys. So I'm gonna give you guys a 5-minute warning here on the um getting on into the giveaway. But I'm gonna post the links here in chat one more time to go ahead and lock in your spot with a mastermind if that's something that you would like to do and bypass the application process. Um, I would highly recommend bypassing the application process. So these spots are, they fill up pretty quickly. And we do want to keep this class size manageable for Zach so that he can give that individualized, personalized attention to everybody. So would be wise to lock that in if you can. If not, that's okay. You can apply on starting on Monday, April 7th. We will, if you guys are not on Zach's wait list, if you guys go give Zach a follow on Instagram right now as well, add Zach Austin Trades. And you guys can see his wait list is in his the link in his bio. I'm sure Callan can share the wait list as well. So if it's something that you're not able to do tonight, you can still get on the wait list and do that as well. Steven said, I've sat with Zach in many trading sessions, a great trader, and you always know what you're doing and why. Easy. Yeah, Jason, GOAT. Yeah, Mike. Yeah, he's him. Game changer. So, guys, Zach is going to change a lot of lives. There's going to be a lot of money made by the people who are able to invest their obviously money and their time into this class, and that is something that will be and forever valuable for you guys. One thing that we always say when we do these webinars is this is the type of education that like you literally can learn this and then nobody can ever take it away from you, right? You're learning a skill that nobody can take away from you. You're learning a skill that where you can be self-reliant. If you guys go to our Stock Dads homepage, just stockdads.com, and watch some of the testimonials that we have there, we have guys that have been forced or fired from their job, who have been able to sustain their family because they had learned the skills of trading. Um, you don't have to quit, your full-time job to be a trader. Zach trades in a way that's super manageable and followable for people who work full-time. He's a swing trader.
I,
He's not like
I
sitting
quite
there.
sorry to interrupt. I quite literally developed my swing trading strategy for those people because,
Exactly.
from the business side, I wanted to retain as many people as possible. And I literally crafted my strategy for those types of people. So people always ask, oh, I can't stay tuned all the time. Like, you don't need to. It's that simple. It's like I have something for everybody. And that's why I think I'm very diverse. I have this is just one of my strategies for day trading. Swing trading is my bread and butter. And we haven't even touched on futures yet. We're obviously we've been doing pretty well with that, this year so far. So
Yeah, I mean, guys, like I personally have trouble following some of our traders because I don't like to sit and watch charts and I don't like to sit and, trade like actively, throughout the morning because I want to be doing other things. I like going to the gym or I like playing pickleball or whatever, right? A lot of you guys have jobs that you're working and you like can't be on your, phone. You can't be staring at charts and all that kind of stuff, right? Um, Zach's strategy is one that you can follow regardless, right? It's one that I've been able to follow and one that I've been able to pick up trades and make money on using his strategies without having to sit there and I could do it from my phone, right? It's not this intense, type of strategy and stuff, but it's so good. It's one of those like you don't want like sometimes you sound like you downplay the strategy is like, oh well, it's something that you can do from your phone, and it makes it sound like, well, that's not a great strategy. No, that's what makes it the best strategy,
yeah,
right? It's what makes it actually realistic for people, and it's what makes people be able to buy time freedom and instead of buying something where now I've exchanged a full-time job at a desk or doing construction or whatever. Now I'm doing a full-time job sitting in front of a computer at home watching charts and stressing and losing my hair and all that kind of stuff. It's an incredible valuable skill that you guys really should consider checking out. So
Couple
the
quick.
links are in the chat here. I know we have a lot of questions.
Yeah, I was gonna say two things. One, if you have questions about Zach's webinar tonight, if you could repost them, because we've obviously had a lot of chat since then.
Yeah.
I've got a couple in there, but I want to get back to those questions because there were some good ones in there that I want Zach to go through. Two, quick couple of just housekeeping things on the mastermind. We are starting in late April. The classes will be in the evenings, generally probably. I mean, Zach, you'll probably lock this in, but probably like 8 p.m. Eastern time. We make all of the recordings available to you for life. So most mastermind students like to watch and rewatch the recordings because they're new stuff and they, sometimes you miss something the first time. And then we also have our community chat where you always are going to be able to ask questions with all your students and stuff like that. So it's really it's not just, hey, four weeks of live classes and then, good luck to you. It is, you have these classes for life. These strategies are very learnable in that time. As well as it's also very beginner friendly. I think one of the things I really love about Zach's strategy is that it is not because it's not fast paced day trading. It is there's time to as you're learning stuff. If you have terminology that you need clarification on, if you feel like you are a beginner, this is a strategy that I think you can both pick up some of the lessons that you need to pick up and implement these very quickly. So, and all of the masterminds of Stock Dads, we have people like myself. I usually sit in on them, other members of staff who come in and try to really help the beginners as well as our entire community. So if you feel like, hey, some of this is new for you, but you want to try it, we really try to make sure that you have the support that you need to sort of catch you up to maybe some of the more advanced students so that you're getting as much value out of it. And again, you have the recordings for life. So if you sit through it and then you have to go back and read and learn what is this terminology? What does he mean by failure to go lower? What does he mean by this? Okay, great. You'll learn that. And then the courses, you'll catch up with the courses and be able to implement them. So I just highly suggest you taking advantage of this opportunity if it's something that's on your mind. So let's see some questions. Let's get some of those questions in there. Where are we on giveaway, DJ? Are we good to?
I'm gonna give a 2-minute warning on the giveaways. If you guys have not gotten on to the giveaway list, you have 2 minutes until 9:50 to get on that list to be considered for the giveaways. So
All right, I'm going to start going with some questions. And guys, feel free if you asked a question a half hour ago and it's, 20 miles up the chat, just repost it and I'll try to get them to Zach. So Zach, first question, how many previous earnings do you usually go back to sort of get your basic idea of what that sort of ADR is on your earnings play?
I mean, really, there's no limit. You can go back in theory forever. I typically go back like the last year, which is like the last 4 earnings. But also the key thing to understand too, and I think we talked about that with the first example with QFin. I'm just gonna go back to it really quickly, is that we're taking into consideration the dollars that we're moving, right? That's definitely something that we're gonna keep an eye on for, right? Let me just go back to the daily chart. But also we also have to keep an eye on the percentage, right? Because a $2 move on a $40 stock is much less, meaningful than when we get this $2 gap up on a $20 stock. So this is just 2 earnings ago. We had this, 10% intraday move. So the fact that we had a 10% intraday move just 2 earnings ago, even though it was only $20, yes, we've doubled since then, but that is kind of what gave me the green light to know that we could potentially get a 10% intraday move on this day, and we got closer to like an 11 to 12% intraday move. So, to recap, really no set rule, but I usually go back to the last like 3 or 4.
And I want to like clarify that like you always looking at these moves in percentages. You're not
Yes.
calculating them in dollars. So it's like whatever it is, you look back, if you want to go back a year of earnings moves and say, okay, it averages a 7% move, an
Yeah.
8% move, an 11% move.
Yeah.
That's pretty key.
Exactly. Because that's the key thing is it doesn't really matter the dollar. Yes, it's
Yeah.
easy to visualize, but the percentage is the key.
Victor, I'm going to come back to yours in a second, but we are posting. We do have a little graphic that we've been posting for the criteria. I'm going to come back to that at the end. So stay tuned. So would you say your strategies are very black and white? If X, then Y. If this, then that. Or how much in the moment interpretation and judgment do you feel like is necessary to implement your strategies?
Yeah, good question. For me personally, and again, everybody's different in trading, and the beautiful thing about trading is that there's no wrong way. I'm a big believer of being a proactive trader and not being a reactive trader. I know exactly where I want to take my entries, how I want to take them, and then all I'm looking to do is just make the price action align with my thoughts. So I'm not like constantly saying, okay, when do I enter? When do I enter? I know. And so it's just a matter of my predetermined thoughts, ideas, entry, meeting the price action. We take entry. And from there, all you can do is take a proper entry to follow your plan, size accordingly, use a stop loss. From there, the market's going to do whatever it wants. So my goal is, obviously as an educator too, is to show and in detail make you guys understand the highest probability setups. Risk to reward is great. Having a high risk to reward is great. But if it's not a high probability trade, ultimately it doesn't do you much. So I will say definitely it's very, very black or white. As black or white as the market can be, that's how I try to be. So
I want to go back to Victor's question here. Victor, if you notice a couple of comments down, we posted again the checklist, X checklist. If you look at Callan's post here, but real quick, I'll just read it off and then Zach, if you want to recover it. But basically, you're checking the previous intraday post earnings move. You want that ADR and you want it in a percentage. You want to know, okay, over the last year, this stock. The next day it's moved 7%, 8%, 9%, whatever that is. You want to calculate that. Second part of it is you want the gap to go over or under a key level. A little bit, there's another question about those key levels. Can you generally just kind of like what, I know those key levels can come from lots of places, kind of give us a little bit of an idea of what those key levels are. It's key support and resistance levels.
yeah, so that's like that's part of the secret sauce in theory, but without gatekeeping too much, I use key reactionary points to where trend flips. So these key levels, that I'm calling them for lack of a better term, they come from previous reactionary trend flipping spots, and that's why they're key, is because that's where previously the trend is flipped.
So
But
generally, I mean, you have your own way of looking at it, but key levels of
yeah,
support and resistance that you've seen on the chart on
essentially, yeah. But the thing is, many people can mark like supply and demand and support, and again, everything really comes down to the same thing. Just this is just part of my secret sauce. So yeah, supply and demand,
yeah,
support resistance, however you want to view it,
yeah.
for sure.
And then the next part of the checklist, will the
Mhm.
EMAs be in alignment or flip from this move? Can you maybe just quickly give us
Mhm.
go over that one more time?
Yeah, so in simplest forms, I'm not sure if any of you guys were on my webinar from the fall, but I'm a big believer if you're looking to go long, you want at least two of the three time frames in your favor, meaning the daily, weekly, or monthly when looking at a swing trade or a day trade for the most part. So for example, if the daily and the weekly are in an uptrend, the monthly is not. If all three are in an uptrend, that's good. If the daily and the monthly are in an uptrend, the weekly is not, that's fine. You at least want two of the three higher time frames in your favor. And it's a plus bonus if the EMAs are then flipping. So, I showed this example here with QFIN. I showed the GRMN as the EMAs flip, giving you that nice impulse. And the final example, which I didn't really touch upon, which is really nothing crazy, it was just to show you another example of this. AT&T. AT&T is a stock that barely moves, but guess what? We broke out of this downtrend, daily flipped, and we got a nice move. I remember this trade I got about 120%. And to make 120% on AT&T in one day is like absurd because the thing, if you look at the daily here, you'll be lucky to have it move like 30 cents. And so we were able to get, an over $1 move, which is like wild. So,
Amazing.
yeah,
And then the fourth part of the checklist is, does it have big or open targets that align with the ADR, right? So
exactly.
does your trade have somewhere to go that are you running into other levels? Are you running into support and
Yeah.
resistance, right?
So the key kind of example there is the BABA, right? So despite BABA gapping up, we bumped right into this key resistance area here, which is what made me actually look for the short back under the opening print.
Got it. Love it.
Yep.
Hope that, Victor, I hope we went through those again. I hope that helped you. Again, I think this graphic that Cal has posted is a great way, just as a great reminder. We've talked about the key levels. So contract selection. How far out at the money? What strike price and expiry are you looking for before entering these? So where are you
Yeah.
finding your strike? And you tend to buy out a little more time on these, right? Even though these are a
Yeah.
1 day move, you're not necessarily buying the week's expiry, right?
Yeah. Some of them only have a monthly expiration, so you don't have a choice. If you do have a choice, I always like to say buy some time, and you also want to, in simplest terms, if your target is, let's say, $90, I want to buy a strike where by the time we're at my target, I'm either in the money, at the money, or approaching the money. So for example, I would get like a 89 call, or I'll get a 90 or a 91 call if the price is at 85. I don't want, when I'm at my target, I want, once we hit there, I want to be right near that kind of in the money, at the money type of zone.
Yeah,
I don't really care the date. I try to buy time, but I just know in my brain it almost doesn't matter what the date is. If we're at the money or in the money by the time my target hits, we'll be up usually minimum 50% for, let's just say. So
got it. Um, so let me catch back up with some questions here. Is an opening print gap above or below levels similar to an open range breakout?
no, for
Yeah,
simplest example.
because you're not really looking at the opening range. When you say opening print, you're talking about the price at
It's
9:30,
just the
correct?
price at the open of the day. Yeah, you
Right.
don't have to really worry about the opening range. No,
You're not looking for the 15-minute candle, 5-minute candle, 30-minute candle. You're
none
basically
of that.
going, okay, at 9:30 a.m. price is now this. At 4 p.m. the yesterday price was X, now it's Y. There's a gap, and does that equate to your rule set, basically, right?
Spot on.
Um, I'm not sure, Eric. I'm not exactly sure. The question is, what time frames work best? I think we might need to get a little more clear on that for this strategy. The strategy is sort of intraday. Most of what he's been looking at is the daily chart. to calculate these levels and to execute this trade. If you want to extrapolate that question a little bit more specific to this, I'm happy to ask it again. You mentioned that you look for confirmation before you enter a trade. Can you expand on what you look for in confirmation? Yeah. What are your sort of, is it just these 4 checklists? Do you care if the market's moving in one direction or the other? SPY's down 1%, but you're looking at
Yeah.
an earnings thing and your rules say you're going long. Do you care?
Yeah, so that's a good question. Mostly no. Post earnings movers can usually move independent. It doesn't hurt, if we're looking upside, the market's going up, right? But most of the time, the post earnings movers will be relatively strong or weak, so it doesn't really matter. As far as confirmation, for the most part, I'm waiting for a 5-minute close, or I've already predetermined to be very aggressive right at the open to look for the dip back above the opening print. I take it right there.
Okay, so once we are into the day and some of the rules are um, in play and you're looking for that pullback to your level, you're looking at the 5-minute chart to sort of close as your sort of like launch point for the actual taking the trade.
Yep, pretty
Okay,
much.
got
Yep.
it. So we're looking for 5 minutes for entries. Um, do you have an indicator for the ADR, or this is something you calculate manually?
I think there is one. I don't use it. I just look back and I just go top to bottom of the day, do the math, and
Yeah.
it doesn't take
Because
too long.
you're talking now, this isn't ADR for every day. This is probably super important, right? There are plenty of
Exactly.
ADR indicators that'll tell you what every stock's ADR is. But
Exactly.
this is specifically the day after earnings for this specific stock. It's a very
Exactly.
custom ADR. I'm sure somebody out there could probably code it, but just to make sure
Yeah,
we're clarifying that for
for sure. Yeah.
that